If you want to get away, one of the best ways to get away is definitely a cruise. Talk about just having a beautiful experience and a good time and having your price kind of dictated ahead of time and not having to think of where the next place to go is. Cruises are kind of just the quick, easy way to have some fun without any stress. But over the last year, cruises have definitely sold off. Carnival Cruise Line, 52-week high of $27, 52-week low of $8.10. That is a huge sell-off. It's actually reapproaching pre-pandemic levels when the whole world was shut down. And Royal Caribbean is in the same boat, no pun intended. Royal Caribbean hit a 52-week high of $98.27 and a 52-week low at $32.64. It is currently sitting at $35.04. Once again, reapproaching pandemic levels. Now, I want you guys to understand that there has been talks of recession, and in my personal opinion, guys, if you've been following the channel, I think we are in a mild recession, and another rate hike of 75 basis points or more could put us in a deeper recession, and the jobs will follow, as I do think the jobs are a lagging indicator of this recession specifically. Every recession is going to happen differently. In my personal opinion, the job market will be a pretty late lagger in this recession specifically. And as we can see today, cruise lines are definitely selling off. The bell just rang, and we have Royal Caribbean down over 2% already. Which begs the question of, is this a time to buy the cruise lines? Guys, let's get into it. By the way, if you are new to the channel, welcome in, consider subscribing, and smash that thumbs up. First thing I want to go over is just top line revenue growth for Royal Caribbean. That is specifically the stock we're going to talk about today. And we can see here Royal Caribbean has had decent top line growth throughout the years. And obviously, guys, we had a pretty big fall off in 2020 and in 2021. I think we all understand that. The other problem with these investments, ladies and gentlemen, they remind me of the automotive business, especially your more legacy type automotive businesses, your GM, your Ford. There's a lot of debt behind these business models, and therefore it's not really a model that I'm truly interested in unless if they get extremely cheap. Very high maintenance costs, very high CapEx, and returns are decent, but you have to have everything clicking on all cylinders. You have to have a strong economy. You have to have a strong consumer. So there's a lot of things with cruise lines that bring on a lot of liability, especially more now than ever when we talk about all the things floating around in the air. When we look at total debt, it went from $8 billion all the way up to $21.6 billion of debt. For me, guys, this becomes alarming and lets me know that there's definitely a liability here when you're talking about owning these type of stocks, especially the uncertainty with the R word that's been floating around, and the fact that we still have a pandemic lingering. But with that being said, these cruise ships have sold off so much that it's time to take a look here. So what we're going to do is try to figure out a true valuation to kind of pay for these stocks here. And as I speak, we have Royal Caribbean down almost 3%. So as I'm talking here, guys, they are selling off. It's like they're watching the channel. When we go to Yahoo Finance, I can see here that expectations over the next 5 years is about 58 to 59% growth. And the reason why that is this company was spitting off roughly $10 billion in revenue and is now sitting at $1.5 to $2 billion in revenue. So it would make sense that year after year, it should increase roughly 40 to 50%. And as we can see here in 2022, they're expected to do about 8.9, in 2023, 12.8. And we can see here, this is how the growth rate is going to come to fruition by most analysts' expectations. And we have price targets of $50 for the low and roughly $142 for the high. It is our job to kind of figure out what we should be paying for the stock here. So guys, the growth rate I use is 27% for the first 3 years, which gets us back to basically where we were at their peak, right around 10.9 billion. We get to 11.2 billion. And then from there, we get to 14, and we basically flatline. I have the company basically flatlining after that and growing at a modest rate and getting to roughly $17 billion in revenue by 2030. Now, when the business was up and running, EBITDA margins did push between 20 to 30%. So the first couple of years, I have EBITDA margins being right around 15, popping up to about 20 from year 3 through 6, and then reaching kind of their pinnacle of 25 to 30% thereafter. Now, I do have very, very little diluting going on here. Now, just to give you guys a heads up, from what I can see, it doesn't seem like Royal Caribbean actually puts a lot of shares on the market here, but I'm doing that because of the debt that they have here. I do think we could see them, once they get the business up and running, possibly doing a little bit of diluting here and getting that debt under control. It just seems extremely high, and I think the best way to do this is to grow the revenue, and while revenue is growing, add some shares to the market and take care of that debt as soon as possible. Might not be the way that they actually do it, but this is kind of the way that I'm personally mapping it out for them. And I'm also building a little extra cushion for myself as an investor. Now, here's where it gets pretty interesting with the cruise lines. I'm using an 8 times multiplier. Just to give you guys an example, Carnival Cruise Line basically trades between an 8 to 9 times multiplier historically, and Royal Caribbean actually trades for more of a premium here. They usually trade between a 9 to 11 times multiplier. I'm being a little cautious here. I'm trying to give myself around a 12% rate of return, which basically means I need to buy the stock right around $27, and it has a fair price value of 2030 has a fair price value of roughly $71.16. Now, if I want to be a little bit more realistic, I think a 9 to 10 times multiplier could make a lot of sense. But the reason why I want to let you guys understand, the reason why I'm doing this is I believe we're in a contraction period of an economic cycle, and I don't know how well the cruise lines are going to recover with all the debt that they're taking on. So I would rather err on caution with these type of investments and not give too high of a multiplier here. For me, guys, I would probably use something in between the 8 to 9 times multiplier, which for me, guys, I would probably be interested in buying the stock right around $30. And if we look today, you can see that the stock is absolutely selling off, and there's probably going to be an opportunity to buy below $30 a share. And if you believe in the cruise line industry long term, then something like Royal Caribbean could be an absolute buy at these levels. I definitely think looking at it below that $30 mark is definitely interesting when we consider that the upside to this stock can be anywhere from roughly $71 to as high as $117 in my opinion. And so, I think there's a tremendous amount of upside to this stock. And I also think that there's a lot of risk considering how much debt they're taking on and the unknown talks of recession that are ahead. So for me, guys, I think below $30, this becomes very, very interesting. I think there's a tremendous amount of upside. And while we could hit recession few years out, I think we can get through this and the economy can come back strong. And I don't know if cruise lines are going anywhere, which makes me actually like Disney a little bit more here, guys, because they're not just relying on one stream of income. They actually have multiple streams of income. Doing these evaluations with the risk versus reward with a lot of these cruise lines actually makes me respect Disney a lot more, guys, for the stability of their business model. So wanted to dive into Royal Caribbean here. Hopefully you guys enjoyed that. And yeah, pretty interesting stock going forward. But we will see you next time, investors. Peace.